Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage-eitel.
All right. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. I got to tell you, every time I hear that announcer hype up the show, I feel 10 feet tall. I think I'm getting into a championship boxing match. And then I look over at Dom and realize I don't want to get in a boxing match with that guy. I'm going to sit right here and just talk about real estate and mortgages. But yeah, my name is Mark-eitel. You are listening to the Mr. Mortgage Show, and you're in the right place. If you have questions, curiosities, you just want to know what's going on with real estate and mortgages, what are these interest rates going to do to the housing market, what is going on, you're in the right place if you've got those questions. We will give you the answers, the data, the tips, the tricks, the strategies, all the inside info that you need so you can go out there and make better real estate and mortgage decisions for you and your family. You are in store for a great show. We've had another interesting week in real estate and mortgage news. But hey, before we dive into that, I just want to encourage everybody to reach out to your circle of friends, neighbors, and just make sure everybody's okay. I know here in the listening area for our station, we didn't have a lot of damage from the hurricane. We did have some tornadoes, though, man. That was pretty scary down in Delray and I think in Fort Lauderdale as well. That caught me off guard.
They're saying there was one in Wellington, too.
Was there? Yeah, I saw that. You know, it's interesting that you say that, Dom, because my mom's in Wellington, Dom's in Wellington, and the storm that moved from Kings Point and Delray, they were storm tracking it up to Wellington, and we kind of stayed up and watched that, and we were texting back and forth with Mom, and she didn't see it where she was. But it kind of, you know, up and down along the way, all the way out to Wellington. So, yeah, it's interesting that you say that. Did you see any damage?
No, I didn't myself.
Gotcha. Yeah, no, it was scary and quite a reminder, guys, that even though clearly we were out of the cone by that point, you know, those tornadoes were nothing to mess with. I don't know if you've seen the news or not, but they weren't little Florida tornadoes. There were cars flipped upside down, piled up on each other. And that made me just kind of take note that, you know, any storm needs to be handled seriously. But where I'm going with this is we've all seen such an influx to our state from outside the area. So there are a lot of brand new residents, and we all see them at Publix with their tube socks and their sandals, and they're fighting us for the Publix fried chicken. And we've chuckled at them, you know, newbies, you don't know what to expect. Welcome to Florida, whatever. You know, we all have our little chuckles about the new residents. But guys, today we're all Floridians. They made it through the storm. And I'm encouraging you, as we're reaching out to our friends and our clients all over the state, there was a wide area that was affected. And we talked a little bit about it yesterday. Prepping for the storm is pure adrenaline, right? You're hyper-focused. You're getting what you need. You're getting the house shuttered up or boarded up, your Home Depot trips, you're getting water, gas, you've got yourself all situated. And if you've been here for any amount of time, you've ridden storms out. And you know, once you get hunkered down in that little protective igloo and it's all dark inside, and if you're smart, you crank the AC all the way down because you know the power's about to go out. And you make it through the storm, and it's scary, but for the most part, you're safe, right? You know, on rare occasions like those tornadoes, there might be individual homes that are decimated, but you have a tendency to come through the storm unscathed physically, right? And then you come outside and, oh my God, half my roof is gone, and my lanai is missing, and my boat's off the lift. And guys, that's when the uncertainty starts, right? You know, what do we do next? So we're spreading the word. You know, if you got a leaky roof, that blue roof, Operation Blue Roof, I think it is, that's up and running. We've posted those links to our Facebook page. Just reach out to the new neighbors, the new Floridians. And yes, guys, they are officially Floridians now. They made it through the storm. And let's just help and encourage each other, because where I'm going with that story is once the adrenaline fades and reality sets in, a lot of people don't know what happens next. How long am I going to be without power? Can I get a generator? I don't know if you remember 04 and 05, I think it was. We were waiting in line for ice, and chasing fuel wherever we could, because a lot of the gas stations back then didn't have backup generators. Thankfully now most do. But anyway, I know here in our area, for the most part, we're unscathed. But let's just reach out to those around us and make sure. We've got a lot of friends on the other coast, a lot of friends up the center of the state. You've heard me talk about it in the past. The show now reaches more and more of the state. We've got listeners outside of the area. And guys, if you need some help, call your real estate agents. You'd be surprised at the resources they have. They know contractors, they know handymen, they know painters, electricians. More importantly, they may know somebody with a chainsaw that can help you. You can call your board of realtors. Google your county and the board of realtors, one sentence, my county board of realtors, and call them and see if there are affiliate members that are in those categories that can help you. So I shared this on a show earlier in the week, and I just wanted to share it again because it's up to us. We've been through it before, and just that voice of assurance that you can give somebody and give them a little bit of insight and some guidance to get them through the next steps. Dom and I were talking about it before the show. We were kind of reliving, that last really active season that we had here, and people don't know what happens next and I'm going to leave it there. If anybody has a need, you can call or text us. We'll try to get you in touch with somebody. Operation Blue Roof is where you start. If you have a leaky roof, FEMA will tarp it. But guys, remember how long that line was last time. So encourage your people to get in line early for that. And we'll post that to the Facebook page. But hey, we dodged a bullet. We were blessed on this side. Just a reminder that Mother Nature can flex on us anytime she wants. And she just wiped out a big swath of the West Coast over there. So prayers are with you guys. And here's to a speedy recovery. We are here if you need us. But anyway, that being said, let's dive right into the show. I just wanted to acknowledge that because I think it's super important. But hey, each week we dive into the headlines about real estate, about mortgages, and there was another week of interesting data. And, Little Miss Red Riding Hood, who, by the way, I actually quite admire, but Diana Olick at CNBC did not disappoint. She has another great article this week headlined, "Home Prices Cooled in July at the Fastest Pace in the Case-Shiller Index History." And you read that and you think, my God, home prices are cooling at the fastest pace in the history of this index. And Case-Shiller is no joke. That's a legitimate data source. Well, I'm not going to, beat this whole article up, but I am going to skip down to the key points. The very first key point is the 10-city composite that makes up this particular index saw year-over-year appreciation at 14.9%. So still year over year, darn near 15% appreciation. The cooling that they're referencing is that number is down from 17.4% in June. So clearly the appreciation is slowing, but appreciation is still happening. And what I mean by that is homes are still more expensive this year than last year. And I posted a really neat article to the Facebook page, and you can find that at The Mr. Mortgage Show on Facebook. Knock did a survey regarding all of the top housing markets, and surprisingly enough, a vast majority of them are still leaning towards sellers markets, meaning homes are moving rather quickly. So one thing that I found super interesting was the national average is 18 days on the market. And guys, that is still scorching hot. Homes used to sit on the market for 30, 45 days without a contract. And now the national average is 18 days. But the ones that were priced at 225 and under were on the market for 7 days or less in August. And we can dive into that. I posted that article to the Facebook page, but I'm sharing all that only because the headlines indicate that the market's slowing, it's cooling, the end of the world has arrived. But you read the data in these articles, and here's one that says, the average days on market is 18 days, and that there are still a big number of housing markets out there that are moving a lot faster than that. So, and even that doom and gloom Case-Shiller headline that Diana Olick shared with us earlier this week still shows a 15% year-over-year increase in value. So, guys, the sky has not fallen, although the hurricane might have made you think it was. it's moved through, the skies are clear, and it looks like we're still in the clear for real estate. But you hear the music, that's my cue. We'll be back in sit tight for 2 minutes. On the other side of this, there'll be more of the Mr. Mortgage Show.
Buying a home can be stressful. Willow Title Services will help you close the deal. Offering tailored services for your unique home buying needs, you'll have a single team member guide you from day one to the day you get your keys. They have a combined 50 years of experience, so trust the closing experts and contact them today. Visit WillowTitleServices.com. That's WillowTitleServices.com. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant files our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back, and yes, you can call or text that number, 855-462-7292, 855-462-7292. Get your questions on the air right now by calling or texting that number, 855-462-7292. Or you can always check us out online and just type in Mr.Mortgage, never a .com, just hit Mr.Mortgage, hit the enter key, will pop up. In the upper right-hand corner is a Contact Us button. There you can submit your questions. Dom is a man of many talents. He runs the board. He gets your questions off the text line. He answers your phone call as well as your emails. So he'll get you on the air. I wanted to finish up one quick thought. I mentioned that knock article. And I'll publish this to the page also, but they said the top 100 markets in the country, in housing markets, 71 still remain a seller's market and 22 remain neutral. And then the balance of that, what would that be? The balance is 7 markets, must be a seller's market. It doesn't say here, but that's the logical deduction of reasoning, or reasonable deduction. I did the math in my head is what I'm trying to say. But interestingly enough, the Fayetteville, North Carolina area is still scorching hot. They're calling that a seller's market. Akron, Ohio, Winston-Salem, North Carolina. Hey, that's 2 for North Carolina. Cleveland, Syracuse, Rochester, New York, Hartford, Connecticut, Greensboro, North Carolina. Hey, 3 for North Carolina. That might be the new Florida. And Columbia, South Carolina. Oh, there's El Paso, Texas, kind of elbowed their way into the list. But those markets are the top 10 sellers markets in the country based on this article that was provided by Knock and their economists. So found it super interesting. And they also experienced in Fayetteville, in addition to that scorching hot 7 or 8 days on market, 7 days it is, a 56% bump in home sales. So they are still experiencing growth, sales volume growth, and a ridiculous short time period on market. So not the entire country is experiencing that. And we talk about it all the time. Real estate is hyper local, meaning the market is influenced by the local economy. It's not a national thing, although we always spout these national averages. there are some neighborhoods and some price points in some regions that are always better insulated from the humps and bumps of the market. So hopefully you found that interesting. If you'd like to talk that through or you need more information, I'm always open for a discussion. But before we get to discussion time, I want to jump into questions because that is my favorite part of the show. And I know Dom was telling me at the break we had some come in. So let me throw it over to Dom. Hey, Dom, what do we have?
Cooper is asking, what will this hurricane do to the housing market over in Tampa? Do you think it will slow down?
Wow. Cooper, that was Cooper. Yep. That is a great question. So, yes, I do think it's going to have an immediate impact, no doubt, right? Because there is somebody right now in Texas who was thinking about relocating to Tampa, St. Pete, or, Clearwater or Cape Coral, Fort Myers. And they're thinking to themselves, my God, what am I going? I'm not doing that. So in addition to the natural hesitation that somebody's going to have to put themselves in the crosshairs, there's going to take a bit of time for all of this to shake out, right? Because you're not able to sell a damaged home with a mortgage, right? So somebody's going to have a difficult time getting a mortgage on a damaged home. The values will be temporarily, I don't know if they're going to be down, but we're not going to see a big appreciation spike out of this hurricane. So I'm saying all that based on what I saw in our local market here in the 04 and 05 season. It did impact the activity in the market. Now, like anything else, time heals all, and people, they'll move beyond that mentally. And, people will still want to live in paradise. Absolutely. I don't think there's a long-term effect. It's going to be interesting to see what happens to insurance moving forward, because we've already experienced, big increases in insurance rates. And now I don't even want to guess at what the damage numbers are going to come in, because that storm hit a very populated and very expensive area in Naples and Cape Coral, and then just moved up the center of the state. And, a lot of the area that it hit before it got up, a little farther north was not a very populated area. We might have lost a few cows. But I say all that only because I do think there'll be an impact on insurance premiums moving forward, but nothing happens immediately. But, I'm going to remain optimistic on the market. I don't think a hurricane historically has ever, turned the buyer pool off to the idea in living in Florida. We saw it happen in Andrew in the early 90s, and then I mentioned that period of time in the early 2000s. And here we go again. I think the draws to living in the state are always going to outweigh the odd hurricane here and there. But to your question, I do think there's going to be a pause at the moment, because here's how it works in the world of mortgage. If anybody's curious, if there's a house that's under contract and a storm hits and that county's considered a disaster area, funding is paused in those areas. And we were getting pause alerts all during the Thursday and Friday on specific counties, and they were adding to the list as the storm was moving up. And the lender funding pause requires the appraiser to go back out and do another physical inspection, just to walk the property, take new pictures to make sure that it's not damaged, it's still livable, because a lender's not going to, loan on a damaged property. So that is the very first effect that it's going to have. If you are under contract and you're buying an affected property in one of those counties and the funding department has already paused, you are going to be required to have an appraiser do an additional inspection to make sure there's no damage to the home. And if there is damage, then it's going to have to be repaired, and that's going to involve likely an insurance claim by the sellers, and then that window of time before you'll be able to close as the buyer. But brilliant question. I've got some people who are even prepping themselves to go over and take advantage of what they perceive may be some bargains, right? If somebody's got a damaged home and they just want to sell it for cash. I've already talked to some investors this week who are thinking there might be some opportunity over there. But before we go pouncing on opportunity, let's make sure everybody over there is okay. But that's a great question. I think it'll have a short-term effect. And then I think once the water recedes and everybody gets, the roof fixed if it's damaged, then we're off and running again. But I appreciate the question. Hey, Dom, what else do we have?
Angela sent an email. Our lease is up at the end of December. We planned on buying a house, but are rethinking that with these higher interest rates. What do you think?
Well, I'm going to ask you a question. What position would you have been in if you made the move last year? Because the reality is none of us have crystal balls. Absolutely, there's not one out there. I look every time I go to a conference. If I see somebody, giving information, I'm always looking for their crystal ball, and they just don't have one. So I say all that not to be, a smart aleck, but what happens if rates continue to go up and you're able to buy a property now, today? And let's say you use one of the buy down strategies that we talk about all the time and you buy the rate down. So let's say you get let's say you get a rate at 6 or 5.75. What happens if rates go from 6 to 7 to 8 and you look like a hero having bought that rate down in the 5s and you got the home you wanted? So I'm never, ever a big fan of making today's decision based on tomorrow's assumption, unless you've got a rock solid, piece of data that's indicating something's about to happen, and we just don't see that yet. So, I don't want to encourage you to do something that's uncomfortable, but I want to discourage you from being pessimistic. If you're able to make a move now, meaning it makes sense, right? It's in your budget. And I always ask people what they're paying for their rent. If you're paying $2,500 a month for rent and you can go own something for $2,500 a month, and let's say rates fall, well, if that's the case, you could refinance. And I know people don't like to refinance. They say, okay, we're 2 years into our loan. We don't want to start over again. Well, you can do a strategic refinance for 28 years, for 23 years, for 17 years, depending on how far into the term you are. So you're not extending your term, and you're just lowering your rate. So that's one idea around what happens if rates go down. But if rates go up, buying now makes more sense. So I would encourage you to look hard at your budget. And if your budget works and you can find somewhere that you would like to live, look at the last year's worth of appreciation that you would have had you made, made that decision a year ago. So, hey, you hear the music? That is my cue. We'll be back into sit tight for 2 minutes, and we'll be back with more of the show.
Buying your home is likely the biggest transaction you'll ever make. With stakes that high, you need certainty. Willow Title Services strives to take the stress away by providing a single point of contact with clear communication, resulting in a painless and positive experience. Willow Title Services has over 50 years in industry-leading and closing techniques, rooting them in the experience needed to get you to close. Call Willow Title Services at 561-737-1630 or online at willowtitleservices.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark-Eitel, and you are listening to the Mr. Mortgage Show. And you're in the right place if you need answers. I want answers now. So we are going to continue with your questions, as they are my favorite part of the show. And I was talking to Dom during the break. I know we've got a few that have come in, so let's work our way through Q&A. Hey, Dom, what do we have?
Phil sent a text. You've talked about a bank statement loan for people who own their own business. Can you explain how that works?
Hey, Phil, that is a great question. And I've talked about bank statement loans as alternative income verification strategies. And I've also talked about asset depletion and ability to repay. So I'm not sure which one you're talking about, but here's what I'm going to do. I'm going to answer that question, and I'm going to touch on all three, because I'm guessing you're talking about the bank statement loan as an income verification strategy. It works really well for self-employed people who may or may not, and may not is where I'm going with this, claim all of your income on your tax returns, right? Because we all have great accountants, and we never ask them to maximize our income. We ask them to reduce our tax liability, and they do that by writing everything off. So very few self-employed people actually show all of their income on their tax returns. That being said, the bank statement loan allows us to take an average of your monthly deposits. So sometimes it's 12 months, sometimes it's 24 months, depending on your credit score and the amount of money that you're borrowing in relation to the purchase price. So that will dictate how many bank statements are required. But we look at the averages over 12 or 24 months, sometimes personal returns, sometimes business, sometimes both. And that average is used to determine how much income you're making each month. Now, one thing to keep in mind is you don't get a dollar for dollar credit, because if you're bringing $100,000 a month in and you're a contractor, chances are that the vast majority of that is going out in the form of labor or materials. Now, if you're bringing in $100 a month or $100,000 a month, that's the job I want. Then you are a consultant. You may be keeping the lion's share of that because your work product is your intellectual effort. So I say all that only because depending on your field, a different multiplier is going to be applied to that monthly balance to determine what your actual income is. And sometimes a CPA can jump in there and say, hey, I do his taxes and he has a 15% expense ratio, and we'll use then 85% of the deposit. So hopefully that clears that up. That's how we use bank statements to determine income. The other things that I mentioned regarding bank statements last week was the asset depletion, and that's designed for somebody who has a decent pile of assets, but they're not showing much income. They may be retired. They may, whatever the case may be, they're just not generating income, but they've already stored up a bunch of assets. In that instance, we can apply a term of 5 years, 7, 10, 30, depending on the loan program, the age of the borrower. We look at that pile of assets, and if we were to take over the course of 10 years, 1/10 of that every year. So if you have $1 million and the loan that you're using has a 10-year depletion term, then they're going to use $100,000 a year for your income. So bank statement loans is income verification using the amount of deposits that are flowing in and out of the account each month. Asset depletion is looking at your portfolio, looking at what's in the accounts, and then depleting it using a term that's dictated by the loan program that we're using. Now, here's the thing. You don't have to take the money out of the portfolio. They're just mathematically saying if you were living off your assets, this is the maximum that you would take out. And then lastly, ability to repay in full is the last strategy, where if you've got a savings account or a portfolio with a bunch of money in it and you're able to actually pay for the property in cash, and that money's been there, it's seasoned, there's no money coming in and out every month, it's not your operating account, it's a savings or portfolio. In that instance, there are loan programs that just look at your total assets, and then you're off and running. So those are the three products that we talk about most often involving bank statements. So I hope one of those three answer your question. I'm guessing that it's probably the income verification, but I appreciate that question. It was a good one. Thanks for that. Hey, Dom, what else do we have?
Angie sent this one. Just want to say thank you. My husband called you and asked for info about lowering our insurance. You referred us to Chris, and we saved a good amount on our policy. Thanks again.
Hey, Angie, thanks for calling and letting me know that worked out. Yeah, that was awesome. I know that when I sent that over, I knew that Chris was going to be able to help you. So, hey, and for anybody out there that's struggling with, I need a good real estate agent, I need an insurance broker, I need an appraiser, I need a surveyor, give us a shout or shoot us an email. You can go to the website, mr.mortgage, use that contact us button, shoot an email to my office, and I'll be happy to get you in touch with somebody, because I don't write insurance and I don't appraise properties. But over my career, I've met a lot of rock stars in all of those areas that I'm happy to refer you. And, these are people that I would use myself. So happy to do that. But super, super excited to learn that worked out. Thanks for that, Angie. Hey, what else do we have, Dom?
Kevin sent this one. I'm moving back to Florida and going back to my old job. Will I need to wait a while before I can get a mortgage?
Hey, I'm laughing because when you said moving back to Florida, in my mind, I heard going back to Cali, that old LL Cool J song. But I don't think it works for Florida. I couldn't resist. Guys, every week I get at least one time where an old song or an old movie or something jumps into my head. So I thank you thanks for indulging me. But moving back to Florida, yeah, it just doesn't work. But anyway, to answer your question, so if I'm understanding it correctly, you're moving back, you're taking the job that you had before you left. If it's in the same career field, it's unlikely that you're going to have to wait. And we talk about that all the time. Actually, we just kind of referenced it in the opening of the show. We had so many people relocate to the state recently. Well, a lot of them weren't working here for a long period of time before they bought. As a matter of fact, a lot of people came down in the U-Haul, closed on their home, and went to work the next day. And you may say, how does that work? Well, if they were a manager of a store and they get recruited by another, that may or may not make sense to people. Let's say you were the manager of a retail store, and you get recruited by another company and they relocate you to Florida. Well, you've got proven job history in the career, in the position, at that pay rate, and another big company just whisked you away to Florida. All we need is an employment letter, an offer letter it's called, from your new employer confirming the employment and the salary amount, and you're good to go. Where it doesn't work is where you're changing careers, right? So that store manager of Macy's, and I don't even know if there are Macy's anymore. I'm embarrassed to say I haven't been to the mall in a very long time. Thanks, Amazon. But anyway, if you're a Macy's manager in Idaho and you're going to come down and sell cars in Florida, or you're going to be an insurance salesman, or I don't know, a completely unrelated field, or you're going to straight commission, then yes, you're going to need to be here for a while and, have that job history, more importantly, in that field. And that if you're now commissioned, you're going to need a couple years work history. So I know I went a little bit sideways there, but my point is that in most cases, and it sounds like that would also apply to you, you're not going to need to have a employment history here before you can buy, because I'm guessing you stayed in the same career. And the good thing is you're coming back to a company that you worked for previously. So I'm guessing that there's employment stability there. So I hope that helps. That's a great question. If you need more information regarding that and want to have a deeper conversation, give me a call. 855-462-7292 is the Anytime hotline. You can call or text that number. And when Dom and I aren't in the studio, that pushes to my office. But hey, you hear the music? That's my cue. We'll be back in 2. Sit tight for 2 minutes, and we'll be back on the other side of this break.
New to South Florida and ready to sit down roots with a new home? Willow Title Services makes closing a smooth, painless, and positive experience. With individual service for each buyer's needs, Willow Title Services has a combined 50 years plus of experience with industry-leading closing techniques. Call Willow Title Services today at 561-737-1630. That's 561-737-1630. Online at willowtitleservices.com. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark-eitel and the Mr. Mortgage team.
Hey, it's Mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark-eitel, and you are tuned in to the Mr. Mortgage Show. And we do this every week right here, same time, same station, and we get you the info that you need and answer your questions, all regarding real estate and mortgages, and maybe even life in general. If you want to know the meaning of life, give us a shout. Dom and I will figure it out. But hey, if you have questions, call or text 855-462-7292. That is 855-462-7292. That's affectionately known as the Anytime Hotline, 855-462-7292. Call or text. Or shoot us an email. Just go to the web and hit mr.mortgage, never.com, type in mr.mortgage, and you'll find us there on the upper right-hand corner. You can submit your questions through the Contact Us box. But we've had some good ones so far. We are going to go ahead and do a rapid round. We need sound effects in here, Dom, like Jim Cramer, Mad Money. A rapid round. Well, maybe that's not the sound effect we need. Dom's giving me the stink eye. But anyway, let me throw it over to Dom and get your questions rolling. Hey, what do we have?
Darlene sent a text. This is my first time texting in. Great show. I'd like to buy an office or warehouse unit for my business. What are my financing options?
Hey, Darlene, that is a great question. And I was going to sing Jolene and use Darlene, but after that rapid round sound effect, fell flat on the audience, I think I'll spare you. But hey, great question. So if you're buying it for your business to occupy, you're going to run your business out of it, right? You may want to look at an SBA loan. There are some amazing SBA loans out there. You can Google SBA lender most of the time, and I'm happy to help you too. Actually, if you want to give us a call, I'll refer you to somebody. But most of the time, those are facilitated through a depository, meaning like a bank, right? And there are loan programs available through the SBA where you can buy the building or the warehouse and actually borrow the funds needed as well to renovate and make it, meet your needs. We've done some SBA financing over the years where, the client purchased a building and went in there and gutted it to the walls. And I mean, literally everything, including the plumbing. They trenched out all the plumbing and reconfigured the space. And it's like a brand new building now, but all of that was done with an SBA loan. And a lot of people are unaware of that you can roll those construction costs in. And with this particular client, they were only required to put 10% of the 10% deposit of the entire deal. So they were able to borrow quite a bit of money as well as that construction portion. And the cool thing was that the interest required to service the debt during the construction period, because we talk about that all the time. When you borrow construction funds, you're not using all of that money right out of the box. And in the instance of this SBA example that I'm using, they bought the building. So the first, I don't remember how much the numbers where it was a couple $1 million. But let's say the first $1 million went to buy the building and the second $1 million was for renovation. That first $1 million is released at closing, the seller satisfied, and then you're required as a borrower now to start paying against that $1 million. But they build what's called an interest reserve into the loan, so you're not paying anything against the loan until the building's done, it's CO'd, and you're moving in. So it operates much like a construction perm loan. That's a very, very good loan product if you're buying and occupying a building for yourself. And I think the SBA rule is 51%. You need to occupy at least 51% of the building, and then you can use that Small Business Administration endorsed financing. But happy to steer you to somebody. And then if you're buying it as an investment, you just want to hold it and rent it out, there are other loan programs, commercial loan products. We talked a little bit about it last week, but typically somewhere around 15 to 20% down payment, and then you could have a fixed period for 5 years, and then it adjusts after that for a total term of say 20 or 25. It's all variable, and those interest rates are usually starting in the 5s and 6s right now. So that's a true commercial loan purchase. Or a loan product that will allow you to purchase it, and then the SBA loan may work for you if you're going to occupy it for yourself, which I did get that vibe from your question. So if you need more information or you want to get put in touch with somebody at a local level that can help with that, give me a shout, 855-462-7292. But let's keep your questions rolling. What do we have, Dom?
Here's an email from Bart. I'm reading that the Fed will likely start lowering interest rates next year. If prices are coming down and rates will too, it seems like waiting one more year makes sense. What do you think?
Wow. Well, if rates come down and prices come down, then absolutely, it would make sense. But here's the thing. Do we really know that's going to happen? I mean, I don't ever, this is nothing personal against any of the prognosticators, but nobody's gotten it right. Nobody saw this uptick as quick as it happened. Everybody knew rates were going to increase, but that was an easy prediction, right? Because they were at 2 and 3%. They've never been that low. So we all knew they were going to go up. We weren't sure when or how fast, and everybody had an opinion. And you know what they say about opinions? Even mine, I'll give you that. Even my opinion, you can use that saying against. But here's the thing. A lot of the people that are saying this are the same people that said rates might hit 3.5% or 4.5% this year. Well, guess what? They've touched 7 a couple times already. I'm not sure that there's going to be an immediate reduction in rate on the other side of this. And I'm not sure that housing prices are actually cooling. We've just read 2 articles today on the air, one that's showing a 15% year-over-year appreciation, and the other listing 71 of the top 100 markets in the country are still sellers markets. So and this isn't a knock on you. You've only got access to the data that's in front of you. But if, a train is going 100 miles an hour down the track and all of a sudden now it's going 40, it's still going forward, but it's slowing, right? And that's what these headlines are indicating. So to answer your question, if rates come back down and prices come down at the same time, then yes, you would have been a genius for waiting. I'm just not convinced that's going to happen. If you bought something now and rates came back down, you could refinance. And then by the term back down, I've got to ask you, where are you imagining that they're going to come back down to? Because if you're thinking they're going to come back to the 2s and 3s, I don't think we're going to see that again. Could they come back to the 4s and 5s? Maybe. But could they go to the 8s or 9s? Absolutely. So I don't have a great answer to that because I don't have a crystal ball. I like to take the data that is in front of me today and make the decision on today. When I go to a restaurant and I'm ordering a meal, it's based on the menu items in front of me. I'm not going to wait until they get my favorite dish and then come back in 2 weeks. So great question. There's a lot of confusion around it. There's a lot of people out there trying to predict the future. And, my grandfather was a super guy, but he was a very simple man, and he made the most sense of anybody in my life because of that simplicity. And, you've heard it 100 times, and it's not his saying, but he used to tell me a broken clock is right 2 times a day. And, there's a group of people out there saying the market's going to crash, and they've been saying it for years. eventually they might be right. And there's a group of people out there that are saying it's not going to crash. So I think when it comes to real estate, if you're buying it as an investment, it's an easy decision, right? Does it cash flow? Am I going to have a payment of $800 a month on this building, on this house, and I'm going to, generate $1,200 a month in rental income? That's an easy decision to make. That has zero to do with interest rates and zero to do with the price of the house. Does it make sense from a cash flow perspective? And then you do the math. Okay, I had to put $20,000 down on the house to make that work. That $20,000 is realizing $400 a month in profit. What's my percentage of return on my cash out-of-pocket investment? Boom. Makes total sense. You can do that math. Has nothing to do with rate, has nothing to do with price, just purely the payment. And then if you're buying it to live in, I encourage you to do the same thing. What is my comfort level as far as a budget is concerned? And does this make sense? Do I want to live in this house? Do I want my kids to go to school in this school district? Am I okay shopping at that Publix or that Winn-Dixie or Whole Foods? Okay, great. I like the neighborhood. I can afford the payment. I'm going to start my journey to building some equity. So great question. As you can tell, there's not a clear answer to it, and we could wax philosophical about this for days. And my man, I love the conversation. So I would encourage you to call. I'll buy you a cup of coffee and let's sit there and shoot the breeze about it because it's a good one. But I appreciate that. That was a great question. But you hear the music, you know what that means. We are rolling into another break. It's a short one. Sit tight for 2 minutes. On the other side of this, we're going to dig into more of your questions.
Buying a home can be stressful. Willow Title Services will help you close the deal. Offering tailored services for your unique home buying needs, you'll have a single team member guide you from day one to the day you get your keys. They have a combined 50 years of experience. So trust the closing experts and contact them today. Visit willowtitleservices.com. That's willowtitleservices.com. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show, where all of the answers to your questions await by calling or texting 855-462-7292. Call or text that number. Dom is manning the hotline, 855-462-7292. And I am going to toss it right over to him, and we are going to dig into some more questions.
Shelly sent a text. I bought a house with my parents 4 years ago. It's been great, but I'm ready to buy a place for my daughter and I. Will this work, or do we need to take me off our current house?
Hey, Shelly, that is a great question. So, yeah, and I get it, right? You're ready to stretch your wings again. Yeah, it'll work for sure. A couple things. You're going to need to be able to verify that your parents are able to make the payment. They're going to have to take over the payment. It would be awesome if they've already been making the payment, assuming that you're all on the loan together, because that way we can establish that mom and dad have already paying for the house, and you're moving into your new primary residence, and then we just underwrite you like a normal purchase. There's other strategies around it that if they're not paying it and they're unable to pay it, but that's a very deep and long conversation that we should probably have another time. And you're welcome to call off the air, 855-462-72. But to answer your question, it is absolutely doable if they want to stay and they're able to make the payment. So great question. Thank you for that. Hey, Dom, what else do we have?
Jill is asking, I've been renting the same house for 12 years. My landlord wants to sell. He offered it to me first. If I say yes, what are the next steps? I'm not sure what price to offer.
Hey, that is another great question. Thank you for that, Jill. Man, I wish you would have bought it 12 years ago, right? You'd have a load of equity in it now. That goes to show you guys when we say, I'm just going to rent for a couple of years because I don't know where I want to end up. And then, here Jill is. And my brother was the same way. You've heard me share he and I's journey on the show in the past. And she blinks her eyes and 12 years go by. But hey, Jill, great question. So what you do next, you're going to have to come to agreement on a price, get a contract in place, and then choose a title company or a title attorney to actually close the transaction for you. And I can refer you to people all through that process that can help. But if you want to pick a price, you're trying to figure out what the price is, check out that freevaluereport.org website that you hear me mention all the time. That'll give you access to our desktop valuation tool that we use. I'll run the report for you and shoot it back to you, and then that'll give you a jumping off point for the conversation. And maybe ask your landlord to throw a number at you before you make the offer back, because if it's lower, then you win. If it's higher, then you'll have the value report as a conversation piece to maybe work the price down. So listen, fantastic opportunity, and I encourage you to jump on it if you can, and I would be happy to help you through this journey and make that home yours. So great question, and I appreciate that. So, hey, guys, we've had some wonderful questions this week. A lot of questions around the uncertainty in the economy. A good question about what hurricanes do to housing. I thought that was a brilliant one. Kind of flashed us back to 2004. But yeah, some super questions. SBA loans to purchase commercial property. I always appreciate your questions. You guys do not disappoint. There's still a lot of interest in real estate. It still makes sense. Guys, you've heard me say it 100 times. Even if properties don't appreciate and it makes sense from a budget standpoint, there's so many other benefits to ownership, tax benefits. Anyway, future appreciation, all of the good stuff you've heard me talk about. So I encourage you, Jill, make that move if you can, and I'll be happy to help you. So, hey, guys, listen, you hear the music, you know what that means. We're at that time of the show where I'm going to ask you for a favor. If you like what you hear, if any of this resonated, if you think somebody that you know will value the information that we're sharing each week, turn them on to the show. I'd love to help them. I'd love to answer their questions. Any friends, family, or coworkers who have real estate questions. Does it make sense to buy? Does it make sense to sell? Should I refi? What's going on in the world of real estate? Introduce them to the Mr. Mortgage Show. You can find all the back episodes at mrmortgageradio.com, mrmortgageradio.com, or check us out online at mr.mortgage, where there is no .com. Mr.Mortgage. But hey, you know what that music means? We've wrapped up another week. My God, where does the time go? You guys have been wonderful. Dom and I will be back next week right here to do it all over again. Have a great week.
That's a wrap. Join Mark-eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.